All right, everybody, this is John. Welcome to the free video. Of course, the big thing today was Apple earnings. Apple basically almost a $1 trillion company again. You now remember, keep in mind that yes, Apple's up, and of course the news is like, oh my God, Apple's exploding higher. But the expected move was $8.70, right? And so we're up about $8.70, and that's great. That'll help the Nasdaq tomorrow. We put on some bullish positions related to Apple earnings. Those will be doing fine. The big thing though on something like this is that its impact on the overall market, and keep in mind that Apple is a huge part of the Nasdaq. So typically on something like that, if I see that Apple has good earnings, you have an opportunity to kind of go in, buy some of the futures. In theory, and again, because anything could happen overnight, we should see some continued strength tomorrow. But then, of course, for tomorrow we've got the FOMC meeting and an expected rate cut. So the idea here for tomorrow is that the FOMC is coming out, and they are expected to cut rates by 25 basis points. Also, that's another way of saying by a quarter point. And the idea here is, well, then is TLT going to explode up? Because basically, if interest rates are going down, bonds are going up. Well, there's a couple things to keep in mind there. Well, first of all, of course, TLT represents longer term, 20 and 30-year bonds, and so they're cutting rates on the shorter term. But the other thing with that too, keep in mind, is that the bonds have already priced it in. So so if we do cut rates, if the U.S. cuts rates by a quarter point tomorrow, I'm kind of expecting a muted reaction. It may be something even sell the news, but bonds have already priced that in. Stocks have already priced that in. But the question is do they actually choke and do like 50 basis points or a half point cut? There's a lot of evidence out there that the world economy is slowing. In fact, the only three economies right now that are expanding are the U.S., Brazil, and India. Now, granted, that's three big economies, but every other economy out there is showing signs of contraction as measured by the PMI. So that is kind of something to keep in mind, and if the Fed is looking at that as an alarm, they may do 50 basis points, but I frankly doubt it. I mean, I think that would also signal, like, if they're doing 50 basis points, they must be really, really concerned, and if they're really, really concerned, do the markets then sell off? So they'll be playing some poker with that. And then, of course, on Friday, we got the employment numbers. In terms of some shorter-term trades, I've been keeping an eye on Tesla here. Of course, Tesla has this big gap, but we're starting to see some short covering here and some pretty solid action today. You can see pretty steady, pretty steady, pretty steady. And I'm looking to see if we can actually keep working our way up to the snow line there. And then another one I like here too. You said all the software stocks got downgraded on Monday, but they're starting to work their way back. Keeping an eye on TTD. CRWD is one that I like. It's come all the way back. I'll have to get back into that one. And then, of course, a lot of them have earnings this week as well. All right, so this week, the rest of this week shouldn't be dull. We'll be keeping an eye on the rate information tomorrow, of course, as it comes out, and then going from there and setting up. Keep an eye on the European markets. Those are in turmoil right now with what's going on with Brexit and could also drive everything else. All right, shouldn't be dull. You guys have a good one, and we'll see you at the next update.